If you own an apartment building in Los Angeles right now, your insurance premiums have gone up at least 30% in the last year alone. And if you haven't been non-renewed, there's a good chance you will be. I've been selling real estate here on the West Side for 40 years. I've never seen anything like what's happening in the insurance market right now. And here's the thing that nobody wants to tell you. This is not temporary. This is the new reality. And if you're not prepared, it could cost you your building. Stay with me. This could be the most important video I've made for LA landlords. I'm Derrick Ruiz, Westside LA apartment broker with 40 years of experience. And I'm also a landlord myself. So everything I'm about to share with you, I felt personally. Today, we're breaking down the California multifamily insurance crisis, what's causing it, what it means for your cash flow, what it means for your property value, and most importantly, what you can do about it right now. Now, why is this happening? Let me give you the numbers first because they're staggering. Since 2022, 7 of the largest California insurance companies have restricted or completely withdrawn from the state. We're talking about State Farm, California's largest insurer, stopping new policies in 2023. Allstate pulled out in 2022. Farmers, which was my insurance company, pulled out in 2026, and they canceled me as of April this year. The average insurance cost per apartment unit has nationally gone up about 75% in real terms since 2019. In LA specifically, premiums have surged about 30% in the last year in 2025 alone. And the California Fair Plan, which is the insurer of last resort, has nearly tripled its written premiums since 2021. They added almost 22,000 new policies in the last 3 months of 2025. This isn't a hard market that will soften when the economy gets better or interest rates drop. The experts are calling this a permanent structural shift. And for LA apartment owners, it changes everything. So why is this happening? 3 main reasons. Number 1, wildfires. 14 of the 20 most destructive wildfires in California history have happened in the last 10 years. The January 2025 LA fires destroyed an estimated 9,000 to 10,000 structures and generated $30 to $40 billion in insured losses. State Farm alone had to shell out about $7.9 billion. Number 2, Prop 103. This was a 1988 ballot initiative that required insurance companies to get state approval before they can raise rates. The process takes 12 to 24 months, and insurance companies were losing money and they couldn't raise rates fast enough to stay profitable. So they just left. Number 3, reinsurance costs. Insurance companies have their own insurance as well to protect against catastrophic losses. Global reinsurance costs have skyrocketed. And again, California insurers, they can't pass those costs on due to Prop 103. So again, they just pack up and leave. The result, a market that has structurally collapsed for many LA apartment owners. Let's talk about the cash flow impact. Every dollar increase in your insurance premiums reduces your net income by about 72 cents. And because you're operating under rent control in Los Angeles, whether you're an RSO rent control property or your property falls under California rent control law AB 1482, you cannot pass those increases on to your tenants. A 20-unit LA apartment building generating $100,000 a month in gross rents might have paid around $9,500 a year in insurance, say in 2019. By 2025, that same building is paying around $17,000 a year. That's nearly $7,500 more annually coming straight out of your pocket. At a 5% cap rate, every $1 increase in annual insurance premium reduces your property value by roughly $100. A $7,000 annual increase decreases your net operating income and destroys $140,000 in property value just from insurance. Nothing else has changed. This is why I'm seeing more and more longtime LA landlords, especially you mom and pop types, asking themselves, is it still worth hanging onto my building? Let's talk about the FAIR plan. Now, I need to warn you something a lot of landlords are falling into right now, the FAIR plan trap. The FAIR plan only covers fire and named perils. It does not cover general liability, meaning tenant injury lawsuits, slip and fall, and habitability claims. It doesn't cover water damage from burst pipes or plumbing failures. It doesn't cover loss of rents while your building is being rebuilt, and it doesn't cover theft or vandalism. The solution to that sometimes is a DIC policy, also known as a difference in conditions policy. That wraps around your fair plan coverage and fills in those missing gaps. But the combined cost is typically more expensive than you were paying before. And here's something that most landlords don't realize. Habitability lawsuits are a completely different exposure. A DIC policy won't cover those. For that, you may need a commercial general liability policy or an umbrella policy. Many landlords are walking around with serious liability gaps and they don't even know it. Here's another situation, the electrical panel problem. One of the biggest red flags for insurance underwriters right now is those old electrical panels, specifically Federal Pacific and Zinsco, and old style fuse box panels that are common in LA apartment buildings built in the 20s, 30s, 40s, etc. These panels have known failure rates and fire risk histories that insurers are actively screening for. If your building has one of these older style panels and your insurer finds out, and they will find out during an inspection, you're either looking at a non-reviewal, a coverage exclusion, or a requirement to upgrade before they'll write the policy. Now, I just went through this personally. I have a 1959 beautiful Spanish triplex here in Westchester. I had the old Federal Pacific panels. When Farmers canceled me in April of 2026, I had to go with a out-of-state insurance company. And of course, they made me change out my panels. Now, fortunately, changing out my panels only cost me $5,375. So it wasn't too bad of a hit. So I've got all new panels now. But if you have sub panels in your building or other complications with the current electrical panels, I've seen landlord clients of mine spend $30,000, $40,000, $50,000 to do a complete, new panel upgrade and replace all the sub panels of their individual units. So it could cost a ton of money. I mean, it's crazy. So that's something that is really important right now. And if you have any questions with that stuff, electrical, I got some good electricians. I've been through it. I know other people that have been through it. Call me. I can give you some good advice. Now, here's another issue with insurance, and that's the SCEP connection or the REAP connection if your building's in REAP. Now, if you have open violations, your insurer may view that as evidence of poor property management and could trigger a non-renewal. Something landlords don't realize, insurers have access to public LAHD records and they use them. The city has a database of SCEP infections, REAP status, and other citations. Insurance underwriters are getting more and more careful. They are going to check on these violations, especially on larger buildings. At renewal time, you cannot hide open violations from your insurer. They are going to find out eventually. And then it becomes a vicious cycle. A SCEP violation for deferred maintenance can lead into the insurance company non-renewing you, especially if your property goes into REAP. You can get forced into surplus lines or the fair plan at a higher cost with these violations on your building. Those higher costs reduce your cash flow even more. Less cash means you can't afford repairs. The property enters REAP and you're not collecting your normal rents. Your income gets slashed 25 to 50%. And a lot of times I see these type of owners, they get forced into a sale at a steep discount because they can't manage the REAP repairs. They're having insurance issues. Their lender wants them to get new insurance or they're going to call the loan due. I mean, there's all kinds of bad things that can happen due to these new realities of the insurance market. So again, I've seen this happen. It starts with one inspection notice and ends with a landlord selling a building that they've owned for 30 years. Now, let's talk about what to do right now. Here's what you can actually do. Here are the important steps. First, know what you have. Pull out your current policy. Do you know the coverage limits? Do you know what's excluded? Most landlords don't read their policy. Now, here's a tip that I do going forward in 2026 is whenever I get an insurance quote, I upload the PDF document to ChatGTP or Claude AI or Perplexity, and I ask the AI to analyze this policy and tell me what they think. I tell ChatGTP, I am a owner of a triplex. I live in the triplex. I have 2 renters. Here is the sample policy. What do you think? And it'll come back and it'll say, it looks good here, it looks good there, but you don't have enough liability coverage. You need to go from 100 to 500,000 for this or that or whatever liability. So I now rely on AI to analyze all my insurance policies, not only my homeowners, renters, auto, life insurance, disability insurance. All that stuff gets run through AI. That's the magic bullet for people watching this video, for landlords. Anybody with insurance policies, which is everybody, you need to run your policies, your declaration page through ChatGPT or Claude AI and get their feedback on what has to be changed, what gaps in coverage you have, what you need to increase, what you can delete from your policy. So that's been really, really important. Also, work with a specialist insurance broker. You need an independent broker with access to excess and surplus lines who works specifically with multifamily properties. What's happening and what happened to me, I wasn't able to find a California-based insurance company to insure my policy. My policy is with a company called Honeycomb. I think they're out of Florida or Tennessee or something. I can't remember at the moment. But yeah, I don't have a California insurance coverage, and my policy went up about $1,500. And I still don't have adequate habitability coverage. So I'm shopping for general liability umbrella policy. I'm also looking into landlord's errors and admission insurance that might cover habitability. But then again, although I'm a landlord, I'm working for myself. I'm not like a professional landlord managing other properties. So I'm making this video May 4th, 2026. So I am exploring all these different options so that I can have, habitability lawsuit coverage and all that other coverage that we need nowadays. So once I get this all figured out, I'm going to be posting more information, but feel free to hit me up if you have any insurance questions. I'm not an insurance broker. I'm a real estate broker, but I'm doing a deep dive in all this stuff, and I can give you some advice, what worked for me, and I can refer you to some of the best insurance brokers that I know. Third, you got to harden your property. So if you're near a wildfire area, you've got to harden your property. Class A fire rated roofing, ember resistant vents, defensible space, etc. That's for people that live up in the wildfire areas. Fourth, you want to address deferred maintenance. An unmaintained property is an uninsurable property. Start with your electrical panels if you have pre-1980 construction, but there's all kinds of other maintenance you should be doing to make sure your property stays in good shape. Fifth, and this is for mom and pop, longtime landlords that have had their building for 30, 40, 50 years. Run the numbers on holding versus selling. If your insurance cost has crossed 15 to 20% of your gross rents, that's a serious signal worth examining with somebody that knows the market and knows values. So I know this is a lot to take in. The insurance market, rent control, SCEP, REAP, it feels like everything is working against LA landlords right now. But knowledge is your best protection. And having the right people in your corner makes all the difference. Somebody like me, a knowledgeable landlord broker, a reliable, trusted, independent insurance broker, very important to have. So if you want to talk about your specific situation, call me or text me directly at 310-308-3174. No pitch, just straight information about your building, your insurance, your electrical panels, your specific situation. I'm here to help landlords. I'm a landlord. I like working with landlords, investors, rental property. I'm happy to share my knowledge with no obligation. If you just have questions, you may never be selling your building, just call me and I'm glad to help. This is Derrick Ruiz with eXp Realty. Please subscribe so you don't miss any of my upcoming important videos, and I'll see you on the next one. Thanks for watching.